this transmission. It is I, Mike Martins. I want to thank everyone for tuning in for Across the Commonwealth to Trends in the Housing Market. We are on Trends in the Housing Market, episode 215. Yes, 215. Can I get some clapping here? Yes, we got some clapping here from our studio audience. So it is episode 215, and we've been, once again, connecting the dots across the Commonwealth and finding and seeing the same patterns happening in all these English-speaking countries and trying to figure out a way out of this financial debts that a lot of people are enslaving themselves in. And I got a very, very important guest on the show today. It's no secret. Everyone knows I've been publicizing this far and wide and making sure that people know to tune in tonight. Because we have a very special guest. So before we do that, I'm going to do a quick channel plug of the channels, actually. So guys, let me just open this right here. Bear with me here. Guys, don't forget to subscribe to the channel. Also, don't forget to set your reminders next for this Saturday's Mike in the Night. It's going to be Atmosphere of Knowing or something. I can't even read what that says there because it's blocking it off. The Atmosphere of Understanding this Saturday on Mike and the Night. Don't forget to set your reminders, guys. Very important. I'm trying to get somebody on the show from RT. Trying to get him on the show. So for this Saturday. Don't forget to subscribe to the Facebook page, guys. I am Facebook's only what do they call it? Public figure that has 115,000 followers, but Facebook will not make me a public figure because I'm not a credible person. And here is my Instagram if you guys want to follow me on that. Let's go to article scan here. Here's my Instagram if you guys want to follow me on that. And now, okay, here it is. Digital Finance and Analytics, guys. There's the channel right there. 44,200 subscribers. Martin North, look at this channel, man. It's got all kinds of good stuff. He's got a video from 23 hours ago. Digital assets, what's going on? So he's got all kinds of cool guests from all over the Commonwealth coming on his show, answering hard-hitting questions. And here, I'm going to give you the link right now because I want everybody to go there and subscribe to his channel right now. There's the link in the comments. And we have his blog here, Digital Finance Analytics blog. So here it is, guys. I'm going to give you guys that right now. Copy and paste that into the comments. I want everybody to go ahead and follow this and be part of it. Be part of the discussion. And if you're wondering why you're always out of money after payday, or why things are happening the way they are, or why getting basic shelter is such a stressful thing to do nowadays, well, your answers will be solved here. And tonight, all right, I'm going to bring him on. So he's been ringing the alarm for years with an incredible informative blog, amazing predictions backed by analytics and research, with articles published all across the Commonwealth. He is a predictor, not a post-dictor. I give you guys Martin North. Mr. North.
Hello there, how are you doing? And greetings to your audience. It's great to be on.
Oh, it's so good to have you on. I've been following you on and off for years now, and it's good. You've been how do you say, ringing the alarm for years. You've been predicting this. You've been analyzing it. You've been up and down and all around with it. You've answered thousands of questions from people. So it's so glad to have you on the show. And before we kick off, how you doing, Martin? You okay?
Yeah, pretty good. I should say good day. You know, in Australia here, it's suddenly very hot here today. So it looks as though it's going to be warm for the next few months. We're coming into spring now. And there's just so much to talk about with regard to housing. But what's interesting is the more you look at it, and, you know, you're very good at this. When you join the dots, you can see consistent patterns, whether you look at Canada, whether you look at the UK, whether you look at Australia, right? There are things going on which you have got to stand back and hang on a moment. Why are things the way they are? And I hope we can get into some of that today.
Okay. All right. So now you got the Australian media saying, okay, we're in a recession. Before COVID, we're entering a recession. Now, Mr. North, in your opinion, and with your analytics, how long realistically has Australia really been in a recession?
Well, it depends how you measure it, of course. If you measure the old GDP number, well, that's always a bit massaged, but GDP doesn't measure very much at all, right?
Right.
And in fact, we've been able to survive because we've been pulling migrants in very strongly in recent years. So effectively, we've been blowing up the economy. We've been lending more debt to people, so they've been buying more houses. So that's helped. And done a lot with regard to iron ore and things like that. So actually, top level GDP, not too bad. But if you go down and look at GDP per capita, which is a much better measure,
Yes.
then actually we've been going backwards for at least a couple of years. And on all the other metrics, if you look at wealth, income, all the other things that actually are important, we've actually been sliding for at least a year prior to the virus hitting. So we were already facing into a gale, and then basically the gale got turned to 11 when the virus came through. So, everyone's now blaming the virus for the recession. No. We were already facing into it, right? What this has done is just amplified it, brought it forward, but this was always going to happen.
Okay, you mentioned the September cliff in some of your article I was reading the other day. Go ahead and explain the September cliff to us, because we are coming towards the end of September in a week or so.
Yeah. So once the virus came through, the government announced a whole bunch of stimulus measures and support measures. So, for example, they created a thing called Job Keeper, which basically paid money to firms to stop them laying off some of their employees. That was, in round numbers, about 7 billion. Job Seeker, which was an enhanced payment for people who are out of work, another 7 billion. They also introduced the opportunity to pull out savings from superannuation, so pension superannuation. That's about 19 billion.
Right.
Plus, they also allowed people to stop paying their mortgages. So the banks gave people a mortgage repayment holiday, and that was worth about 3 billion. So you start seeing these big numbers. And basically what's happened is we've had a massive amount of government stimulus come in. At its peak, it was more than 20% of GDP.
That's
okay. That was a large amount, but then it came back down. So in this quarter, it's down to 7.5% of GDP, thanks to the policies being withdrawn. And now next quarter, it's down to about 2-point-something% of GDP. So basically, we're in this situation where all of those stimulus measures were basically tapering away. Now, they have extended a few. The banks, for example, have now been given permission to claim loans that actually are on repayment principal holidays, not as bad up till next March, so they can just go on doing that for a bit longer. They've basically extended some of the support, but it's still a very significant slope if it's not a cliff. So, and my own concern is that it's already too late. We're already seeing the impact of that. We also know that a number of small businesses who didn't get hold of Job Keeper or indeed Job Seeker are against the wall at the moment. I think about a third of them could actually fall over in the next 6 months, although the government today is announcing they're going to change the bankruptcy rules so that they can go on trading for a longer, a bit like the US system. So that will perhaps, try and support things. The problem we've got is all the stuff that the government's done has been short term. We'll get back to where we were 6 months ago and everything will be fine, right? But remember what I said? We were already heading the wrong way before this will happen. So basically, we've got short-term stimulation that's being withdrawn. That cliff is really now upon us, and I do expect to see the GDP numbers looking quite sick ahead. Also, unemployment, which actually was 6.8% this last month, which was down a bit. The Reserve Bank still forecasting it to go to 10% by the end of this year, 7% 2 years later. And that's the official number. The real number is a lot higher because if you're on JobKeeper, you're not counted as unemployed.
That's correct.
Right? So the official number, if you take all of the various factors into account and take underemployment into account, in other words, less hours than you want, about 1/5 of the those employed is in that category. So there's less income coming into those guys than previously. So we are really now caught in this huge pincer movement where stimulus is being withdrawn. The virus, though, is still bouncing around a bit. We had a big lockdown in Victoria again a few weeks ago. That's looking a bit easier now. But the international borders are still completely shut. So we've got no migration coming into the country, whereas previously migration was very, very strong. We had more migrants coming in each year than natural population growth. We also had a lot of international buyers, looking at property, or they've gone. And the other thing, of course, tourism, a very big industry in Australia, that's cooked as well internationally. So, wherever you look, frankly, you see more issues rather than solutions at the moment from the government.
Right. Okay, now let's get a little bit of nitty gritty here. Now, I remember discussing a few articles here on the channel about, withdrawals, cash withdrawals, this removal, how much you can, and they want to bring it down to 2,000, from 10 to 5 to 2. Now, usually what happens is, I've seen with governments, is they usually discuss something, then they step it back, then they reintroduce it, then they step it back, and then they talk about it again, and then they finally bring it up, and then 2 years down the road they say, what? We told you this was going to happen. And then they kind of throw it in that way. Now, this is the question. This is a very important question that a lot of people have asked. So, Mr. North, do you see, because of the amount of, like you said, debt to GDP that's happening, especially with households and incomes and people just barely hanging on, do you see Australia going into negative interest rates?
Well, negative interest rates is interesting because the Reserve Bank keeps saying, "Oh, no, we'll never go there." But each time their denials are a little weaker.
Right.
Right. So a few months ago, Phil Lowe, who runs the Reserve Bank of Australia, said, no, not on our radar. Then more recently, they said it's very unlikely, right? Mm-hmm. They're going to have to do it. There's no doubt in my mind. The fact of the matter is we've got interest rates. The cash rate is 0.25% at the moment. The real rate, which is the interbank rate, is 0.1%, right? And in fact, one of the big banks came out yesterday and said that they think that they will take the cash rate from 0.25% to 0.1% next month. So I don't know whether that's true or not, but that could be. The problem is that the monetary settings that we have in Australia, they brought rates down quite significantly to very low levels, is not sufficient to do much, right?
Was it deregulated in the 60s or 70s? Because I remember you guys had a really sound system back in the 60s and 70s. It became derailed, and what happened?
Yeah, so we've got a story to tell here. If you go back long-term trends, right, on house prices, right, there have only been 2 times that we saw significant inflation of house prices above general inflation. The first one was after the Second World War, when there was a massive reconstruction and strong migration. The second was in the 90s, 2000, 2010, 2020, when we had financial deregulation. We had the loosening of lending standards. We had increased competition. We had the banks essentially banking on mortgages to grow their business. Then we had the global financial crisis, and they cut the interest rates by nearly more than 4%, 5% from the Reserve Bank's cash rate perspective. So they've used interest rates to drive the economy forward, get the banks to lend more and more and more. But that's now running out of smoke. The problem I've got is that you can cut rates further. You can go negative interest rates, right? And they might well do that. But it doesn't necessarily work because we've got so much debt in the system. Right. We are the most leveraged households from a debt to income ratio in the world. If you look at the BIS statistics. Yeah, well, it's just below that. I mean, it depends on how you measure it. But if you look at debt to GDP, we're number 2 after Switzerland, right? But Switzerland has some unique things about the way that their economy works. So I'm not sure that number in Switzerland is a comparator. So we are right debted up. The other point to make is, this is what people forget, right? There's basically about 10 million households in Australia, right? But not every household is leveraged to the max because debt is concentrated in about 1/3 of households, right? So that ratio of 190 to 200, right, doesn't tell you the full story. What it says is that those who have the mortgages are about 6 times leveraged relative to income, right? 6 times, right? And in fact, the banks are still lending loans to some people at 7, 8, 9 times income. Right? Yeah. So we're still going there. And people will argue, well, that's easy because rates are really, really low. So therefore, the repayments should be lower. Right. But if you look at the actual physical amount that people are repaying, it's actually no lower than it was a decade ago. Right? And
they're paying it off 3-4 times as opposed to twice.
It's crazy because essentially what it means is that you've got that group, that cohort, that 1/3 of households who are leveraged to the gills, right? And interestingly, a proportion, about 12% of them are now not paying interest or principal repayments because the bank's gave them a repayment holiday. So we've got that issue. We also know that a good proportion of them have had income compression over the last few months. In fact, no income growth since 2012 for many down here in Australia. So what it means is that we've got a lot of households who are right up against it, right? Now, I measure a thing called mortgage stress, right? Mm-hmm. Which is a cash flow measure of money in, money out for those with a mortgage, right? And that went from 32% of those borrowing to more than 40% either side of the virus. So now we've got 40% of households who are right on the edge. Now, that's important because it doesn't necessarily on day one translate to mortgage defaults, but long term it does. And I'll give you an example. Over in Western Australia, there's a postcode over there called Mandurah, right?
Right.
And Mandurah is down on the coast south of Perth, right? And we saw the mortgage stress rates rise about 4 or 5 years ago, right? And since then, house prices there have dropped 38%.
Okay.
Around 1/3 of households are in negative equity.
Right.
And we've got high levels of mortgage defaults following. So stress is a leading indicator, defaults follow. And I worry that what we see over there is now what we're seeing in many other locations across Australia. So we are close to the wind at the moment.
Well, Perth experienced that about 7 years ago with the mining bust, right? Perth
Correct.
went, you had homes go up to 900 large, and then they went pretty much bust when the whole mining sector went bust.
Well, at one stage, Perth prices were actually akin to Sydney prices, right? And everyone's saying, oh, this is marvelous, right? But it was all driven by the mining boom. Then the mining boom stopped, and we've seen this steady ebbing of prices in Perth. And it's interesting. Every year, the real estate agents over in Perth, through their local branches, basically say, we're just turning the corner, right?
Yeah, they've been turning the corner for 4 years.
Correct, exactly right. And guess what? No corner yet. We're still going in the same direction. I did some work quite recently for one of the people that I've been looking at property for quite recently. And there's a consistent slide down, all right? Mm-hmm. Houses and units. And guess what? This is the really killer bit, right? The government announced a stimulus package measure as part of the COVID response, right? So basically, there's a thing called Home Builder. So they'll give you money to go build a homeland package, right? The state government also added to that. So you can get $55,000 from state and fed, right? Okay. And you can go get a homeland package, right? Over in Western Australia. Now, here's the interesting question for you. How much do you think the price of homeland packages went up when that was announced?
20%?
$55,000. So the amount of the grant was immediately factored in to the price of the homeland package, right? And that now has distorted new property construction. So people are preferring to do that. And it's depressing house prices in the surrounding area of existing property, right?
Right.
And this is a classic example of stimulus packages don't work. All they do is just
adding more inventory.
Adding more inventory, lifting prices, and basically it's a zero-sum game. And yet, the housing sector, the construction sector are all saying, you have to do more, right?
Yes.
And just be clear on this. Those stimulus packages are designed to support the construction sector, right? They are dressed up as providing housing affordability support, right? But in fact, it's a zero-sum game, and there are so many people getting bounced into these new homeland packages. They've been running out over in Western Australia. They're going to do it elsewhere as well. But these stimulus measures are just still fueling the same old debt-driven fire. That's why home prices are so high relative to income. That's why we've got all the significant pressures in the economy. And I keep saying you can't just sort of recycle the same strategies that they've done for the last 10 years.
Or build yourself out of this.
Yeah, no, exactly right. And remember, migration is zero. So demand is way down from where it was, right? Property investors are losing their shirts because essentially the rentals that they can command are fading, particularly in Sydney and Melbourne.
Oh, the great entrepreneurs that rent out to students. The entrepreneurs, yes.
Exactly right. And particularly high-rise units, of which there are thousands and thousands vacant, right? So the vacancy rates are very high, the rents are going down, and capital value is falling. So actually property investors are losing their shirts left, right, and center. So we've got no inward migration, less demand, property investors looking to sell. The only people who are actually in the market are these first-time buyers. So, of course, they're cannon fodder for the government, right?
Of course they are.
With all these stimulus packages. But it's just replicating the same problem. It's not solving anything. It's just continuing to make housing affordability ever adverse. And look, the average price of a house in Australia is 3 or 4 times what it is in the US, right? Just
Oh, a
for
lot
people
more.
to understand.
Because I could don't make me show you what you could buy in West Palm Beach for 130 grand.
Right.
Okay, Mr. North,
Yeah.
I got this. It's going to add kind of this next question ties into what you've just said a little bit earlier. I want to ask, what else in you could come up with that the government might add from his toolbox of financial tools? What else could they throw at this? They've already did first-time home buyers loans. In Canada, they've done first-time home buyers loans. I know they did in Australia. I know they did interest-only mortgages, which are coming up for renewal. And then they did what was that one other one they did? They did first-time borrower this, and then they did a couple. 100% LTV. They did 100% loan to value. They did that in London for a while. Now, what else could the government throw at this?
Well,
what's left besides negative rates?
Yeah, so if you assume that they're going to use housing to try and drive this forward, right, then lower interest rates, bigger mortgages, longer term mortgages, all of those things are on the table. The problem I've got is none of it's going to work, right? Because we've got to the point where we're debted out, right? And as I've explained, there is no underlying demand to support where property prices are. Property prices need to adjust down. They need to come back to more realistic levels, because what we're doing is we're just perpetuating this bubble. It's going on and on, getting bigger and bigger. And when it falls, as it will, the bang is going to be ever bigger. What the government should be doing is focusing on investment in the business sector, investment in new businesses to
Private
create
sector
new value creating jobs, right? Not just supporting the construction sector, but investing in our future. We have very narrow-based economies here. We have basically the mining. They're sometimes called it's the houses and the holes, right? The houses we've talked about. The holes is the mining sector, right? So they're digging stuff out and flogging it to China, right? And just remember that China. At the moment, of course, the relationship between China and Australia is extremely shaky. And as a result of that, some of those trade connections are getting rather constrained at the moment as well. So we are completely reliant on that relationship. We don't have a broad base in our economy. So we should be building the base. We should be investing for the future. But no, the government is just throwing more money at housing. It's just throwing more incentives at first-time buyers. And my concern is that this takes us into a complete cul-de-sac.
In Canada today, they had a throne speech with our great leader, and basically he stated that they're going to be creating more public sector, more government jobs. That's the last thing we need is more government. Okay, Mr. North. Now this goes to the next question. You were kind of touching on it a bit from the last answer there. How much percentage-wise is needed for the average wage earner to enter the housing market in Australia? So the average wage earner, I guess, would be anywhere from 68 to about 98,000 a year, and they're having a really tough time getting into the property ladder if they don't use these programs. How much percentage-wise? I'm gauging here in Vancouver, where I'm close to my major city. We're looking at a 51% correction for anyone average wage earner to get in. What about there in Australia?
Well, if you wanted to come back to long-term averages, right? I think it would have to be at least 40%, right? More in some places, so a 40% reduction, right? In some places, though, close into Sydney and Melbourne, the multiples are even worse. And the problem is that there's been no, as I said earlier on, no income growth in real terms, right? And now, of course, incomes are being even more constrained at the moment. So that gap is getting bigger and bigger. The other point, of course, is it's harder and harder to save. So if you want to save for a deposit, with interest rates now very, very low, right, if you start saving, you don't get any growth in your savings. So that's the other sort of captured point about here. So you take savings and you take income, and, long term, there should be at least a 40%. And I've been quoted a few times to say just that. If you really want to get back to central, mid growth over a long-term trend, it has to come down 40%. Now, it won't be uniform at 40%. There'll be areas where it will be higher, areas will be lower. But we are still way above long-term trends. And of course, everybody argues Australia's unique, different. It'll never happen, right? It's like we are in this unique Alice in Wonderland world where the rules are different, except I'm not convinced it is. So look at what happened in the UK, look at what happened in Ireland. The financial crises that triggered a fall in house prices didn't trigger it on day one, right? It actually took 3 or 4 years to work through. So,
Right.
and if you look at the peak of defaults in the US last time, they actually hit in year 4 when prices are already slidden, right?
That's
So
correct.
my argument is we are in for a correction in the home prices. The question is how far and how fast they will fall. And they will be supported by government initiatives to try and keep this whole bubble alive. You know, the Reserve Bank will throw liquidity at the banks. The banks will try and throw more liquidity at households. So just to be clear, the answer to too much house price debt and high stress is offer more debt.
That's
Perfect.
right. I have a little saying I said on the show many times. My son asked me the other day, Daddy, how come they don't put more fuel in a spaceship to go further? They go, well, son, the problem is they're going to be carrying fuel to carry more fuel, and it becomes useless. And it's like our debt system. We're just going to be paying more debt to pay off more debt. It gets nowhere.
Well, that's right. And of course, it's interesting now, the government has provided via the Reserve Bank huge liquidity to our banks, right?
Right.
But the banks are having difficulty in lending that on. So at the moment, basically, the banks are saying, well, you know, we can lend to anybody. So they've reduced their lending standards. They're offering interest-only loans. In other words, they are now back into high-risk lending strategies at the time when households are really being caught by high unemployment, high debt level, and no income growth. What could possibly go wrong?
Okay, Mr. North. Okay, now we're gonna get a little semi-analytical here, but a little bit more. Let's technical question. Okay, there's an article here in Canada, and I've addressed it several times. And it says that Canada would be in a recession if it wasn't for money laundering. And this is from a reputable source here in Canada. Now, my question, Mr. North, would Australia be in a recession if it wasn't for money laundering? Hold on. Shadow flipping, the casino scams, all the stuff that's been happening. Shadow flipping is very dangerous. And if we talk about it too much, we might be a target. But would Australia have been in a recession earlier if it wasn't for money laundering?
Well, it's hard to know, of course, because there's very little disclosure here. What we do know is that the amount of information that is actually caught about the individuals who are buying property is very, very low in Australia. Okay. And very few questions are asked about where the money comes from, right? Now, I know that they have know your customer rules and anti-money laundering rules. But interestingly, today, one of our big banks got fined 1.3 billion Aussie dollars for the AUSTRAC basically, they weren't doing what they should have been doing with a lot of international transactions. So we have a rather limited lens, I think, on what's going on. The other thing is that, there have been pushes over the last 10 years to provide more rigorous controls of the way that properties are actually transacted and the flows. The industry and the government have both resisted it. Right?
Well,
now,
Mr. North, here in Canada, there was a team that was put in place to actually start breaking this down. And from 2011 to 2015, they found $210 billion flipped through Canadian real estate, and most of it was shadow flipped. And this is not your typical layering that the mafia does. This is more just selling homes back and forth to two different corporations and cleaning more money in the system. And then after our great leader stopped this investigation dead in its tracks, and we don't know, we only got is 210 billion. And now I wanted to ask you, okay, this is a really tough one. Is there enough, or has there been enough foreign investing in Australia where that if the Australian proper, or the Australian, the regular Joe Donuts that works day to day, if he defaults on his mortgage, that there is enough of a crater of foreign investing already that it wouldn't really affect the housing market so much?
Well, I think that the foreign investing in the housing is overdone, right? I mean, there are clearly areas where there's a lot of it, but actually it's by no means the major reason why we've got what we've got, which is essentially too high prices, as we've discussed. That's been a domestic issue. It's to do with the stimulus measures that have been put in place for a long time. I think that the foreign investment is a critical component, but not the massive issue that, frankly, often the press picks up as being the problem in the property sector, right? If foreign investment wasn't there, everything would be fine. I don't think that's true. I think it's a convenient scapegoat, frankly. And of course, now foreign investors are actually walking away. they've actually selling rather than buying property. And a lot of that was actually Chinese money that was coming through previously. Again, interesting to note, though, that actually, if you look at it in sort of origination terms, there's more money coming from the US and the UK than from China for property. And yet, the stories in Australia is always Chinese buyers buying property in Australia. It is weird how it's been sort of positioned. So I think this is probably an issue that's important, but it's actually not as significant as many people are actually playing it up to be.
Okay, because here in the city of Vancouver and the city of Toronto, a majority of the major investments are under corporate numbers, and those corporate numbers usually tie to foreign entities. Now, Vancouver, British Columbia added the foreign buyers tax in the tail end of 2017, and everything kind of died down, and we got a sort of plateau across the line, but then. Seattle, King County, which is a 2-hour drive from Vancouver, saw this huge spike in foreign investing, and the articles from down there, foreign investors are skipping Vancouver and going straight to Seattle, and King County in the city of Seattle, saw 18% year-over-year gains in their real estate, and they're blaming it on the poor tech workers. And I spoke to a tech worker in Seattle the other day. There's 11 of them living in a 2-bedroom apartment because they can't afford it, and they're blaming the tech workers for it, and they're seeing enormous amount of a takeover there. And I'm trying to figure out Australia, because I'm figuring it would be like here in Vancouver. I'd figure it'd be almost the same thing because you guys are closer. So
well, yeah, I'm not sure. You see, I mean, the official numbers are always fudged. We know that, right? There's a thing called the Foreign Investment Review Board, which was meant to be policing this and didn't do a very good job. And they have certainly put taxes on foreign investors buying particular types of property. And in Australia, they were only meant to be buying newly constructed, not existing property, although that was always fudged a bit too. So I suspect that the true situation is worse than the official data says. But I also don't believe it's the number one issue that's causing all the problems we've got.
Okay, understood. Okay, so we are headed towards spring. You're headed towards spring. I'm sorry. I'm headed towards winter. You are headed towards spring. You got your air conditioner on. Are we going to be seeing a spring rebound that all these realtors in Australia are forecasting? This major spring rebound. Get ready, and are we going to see this?
I don't think we will. What's interesting is the stock levels through winter were always higher than normal, right? So there are people, and there are some people now, looks as though they are wanting to sell. My surveys say that some property investors are looking to bail before property prices fall further. So that's one reason why there will be more listings. We also know that what I call my down traders, so these are people who have held property for a long, long time, maybe with no mortgage now, are looking perhaps to sell to release equity before prices fall. So it's more being driven by the expectation of falling prices rather than actually, great time to buy. The other factor, of course, there is we've got these payment and principal interest repayment holidays. The banks are now calling every single borrower on those holidays to work out whether they can actually afford to start making those repayments. But the conversation, according to people who report back to me, so in some cases, the banks are now encouraging them to put their property on the market because the bank doesn't want to foreclose. But if they can persuade the borrower who's in difficulty to sell and get out, then the bank wins. And of course, it doesn't then count as a bad loan. So those are the factors that are actually supporting the market. But the truth is there is very little evidence of a sustained rebound in prices. In fact, I think prices are falling. There are pockets, particularly at the top end, where there are always prices that are actually behaving. But here's the interesting question. How do you know what's going on, right? We have a number of property portals here in Australia, right? But those property portals have suddenly started to not disclose the prices when properties are sold. They quote the last asking price, interestingly, right? And if I then do some analysis to look at when the transactions were settled, because you can get that data from official sources, guess what? The prices that they are reporting on their portals are higher than the official prices once transacted. And if you actually compare the two, some portals are just dramatically off where I think they should be. So we've got this situation where the portals are portraying a situation that is not real. The other point is a lot of those portals are owned by media companies.
That's correct.
Right? Who have TV stations and publish a lot of stuff online, and we get article again and again and again, all these examples of prices sold over reserve, and now's the time to buy, first time buy. It's like you wouldn't believe the propaganda that's out there. It's all trying to support a weak market, right? So I see very little evidence of price growth. Now, interestingly, a couple of months ago, CBA, one of the big banks here, said,
Yes,
we think prices will fall up to 32% over the next year or two, right, because of the crisis after the virus. They've turned that on their head now, and they're saying, no, we were wrong. We think it's going to go higher. And another bank came out and said, 10 to 15% higher over the next couple of years, although Fitch ratings came out this week and said, no, down at least 10%, maybe more. So there's a massive disconnect between those with vested interests in talking the market up, the banks, right, and the property portals, and some of the more objective independent analysts who are still saying, no, we're not seeing it. I think prices are going to go down rather than up. But we'll see. Maybe I'll be wrong. But my long-term analytics says property is overvalued relative to all the fundamentals in Australia, way over. Supply and demand is completely off kilter. We've got 1.2 million spare properties in Australia, right? 1.2 million spare properties, which means we've got way more properties than we need. We don't need to build more,
right?
But there's still another 200,000 being constructed even as we speak, and building approvals are down, but there's more supply coming on, less demand. Why would prices go up?
Now, Mr. North, I think it was 3 or 4 years ago, I made a video on my channel called the Sydney Brain Drain. And I was talking to people, when I was starting off my channel many years back, and they were discussing that, yeah, Mike, you're right. I have a decent income. I live in Sydney, and it's getting expensive. Now, what this damaging effect of the youth or the educated or the people that actually contribute to the infrastructure that are leaving these major cities because of affordability levels, because they're not going to stand around and work 10 years to put a down payment on a house. Where are they going? There's Melbourne's got this mass exodus, and they have to close down the state because of the virus. Then you got a lot of huge brain drain in Sydney. A lot of people, I know they went to Hobart. A couple of people went up to Perth. Where are these people going? And what are the effects of what's going to happen when you don't have that blue collar or white collar taxpayer that contributes to the infrastructure that's no longer going to be there contributing? What would happen?
Well, I think we're in a very interesting situation. So suddenly virtualization has really come of age, right? And I guess the virus was part of that. So we're seeing significant demand now in regional areas relative to the closer into town. So previously travel distance was a critical measure. It's less so now. So, for example, there are some people in Melbourne who are looking at Queensland thinking, well, maybe I should go to Queensland, and some of them buying virtually, without actually looking at the property. First point. Second point is that if you are actually able to work remotely, you don't need to, go close in. But the third point is prices close into Sydney, particularly units, are dropping dramatically, right? There are some postcodes within 10K radius of the centre of town that are down 30% from where they were. So we are already seeing some of the impacts of this weird situation in property. So people are actually buying in different locations. They're buying different types of property. Houses are still commanding a premium over units.
Right.
But what we are seeing is a lot of units for rent close in where the rents are down 20, 30 or more percent. So it's cheaper now to live closer in. But you also mentioned Hobart. Hobart's a really interesting case. Very small centre relatively. Prices there were booming until recently. In the last quarter, rents dropped in on average 9% in Hobart.
Right.
We are.
I think that's a boomerang. I think I'm going to tell you why I think that. I think it's a boomerang effect of the people that went out to Hobart to give it a try, and now they're moving back in with mom and pop in Sydney or Melbourne, right? So that's what I'm thinking is happening, is that boomerang effect. But what about the public servants? Like, what about firemen, ambulance drivers? I hear horror stories of, for example, people in California, they have to drive 2 hours to their destination every day just to drive an ambulance around and then go back home. How is the infrastructure going to be supported? Like, who's going to support? Who's our mechanics? Are like people that keep this going, picking up our garbage? Who's gonna,
No, it's a big issue. Certainly close in, even people like teachers, for example,
Yes.
have issues and have to travel long distances or live in shared accommodation. I mean, this is the point about housing affordability, right? It hits a very significant proportion of really, really important people with important jobs. Even like nurses, right? For example, it's weird how we don't seem to value those sorts of capabilities, and we actually don't have structures in place to enable them to live closer to where they actually need to live. It is a complete distortion, but it's distorted because the market has been let rip. Thanks to what the Reserve Bank has done, thanks to what the government has done, thanks to the fact we've been banking on housing to save the whole economy, right? The collateral damage is remarkable. And in fact, as a result of that, people either have long commute journeys or just decide to up stumps and move somewhere else. And that's part of what we're seeing. So, and interestingly, if you go into the center of town in Sydney or in Melbourne at the moment, it is so quiet, right? Because nobody wants to go in to the center of town. So we've got this massive shift going on in terms of demographics, in terms of lifestyle, in terms of property use. Interesting observation there. It's hitting the commercial sector really hard,
Yes,
right?
it is.
And this is the story that people don't understand. I think the commercial property sector and the small and medium enterprise sector will be the first areas to really be exposed by what's going on at the moment. The housing sector will follow, but it will be slower.
Here in the commercial sector, it's kind of weird. It's bizarre, actually. There's some people in some Canadian major cities that are just an average sized restaurant. They went from paying $38,000 for property tax to $58,000 to $126,000. There's one guy in downtown Toronto in a decent area, and his place is one story. It's nothing major. He's paying $239,000 a year in property tax. And he's just closing up his doors, and now with COVID, and we're seeing are you seeing the government's remaking or trying to refill their coffers by raising taxes on the middle class more and more? Are you seeing that kind of?
Well, there's actually talk about tax cuts rather than tax raises at the moment. So basically, the government strategy as a budget in 2 weeks will be to pull forward some of those tax cuts to try and encourage people to spend more. My issue here is that consumption, which is about half the economy, right, has really gone through a roller coaster. There was a significant rise as people, bought some things and bought less of other things. Then it went down, then it went up, went down. But actually, household consumption is caught with this high debt load that people have. So my own view is that trying to encourage more people to buy more stuff ain't going to work. Putting extra taxes into the system at the moment will just be a further drag, and most of the commentators here in Australia are saying, well, the government will have to run bigger deficits for longer. Luckily, interest rates are very low, so of course they can afford to do that. There isn't much talk at the moment, officially at least, about lifting taxes. But you've got to ask the question, with all this debt that is being, developed by central government and state governments at the moment, who's going to pay that off? At some point, debt has to be repaid. That's the whole point about, the way that the system works. So debt is there. Now, it can be rolled and rolled and rolled at very low rates, but it doesn't go away. So I suspect that down the track, there will be a moment when taxes will have to start rising, where in fact people will have to start paying, and it will be the middle class that gets squeezed.
Right.
Because by definition, the guys at the top, well, they're always okay. They can manage their affairs and pay almost no tax anyway. The guys at the bottom don't earn enough to actually pay much tax. So you've got the clump in the middle. So my own view is we're going to see a huge compression of the middle class, not over the next 12 months, but over the next 3 to 5 years.
Okay, Mr. North. Now, getting into debt, let's talk about now, there's been a lot of, let's say, local banks have been getting into a lot of trouble, and there's a lot of bad deals on the books. Lots of people are being lent money that shouldn't be lent money. Now, my question, Mr. North, is who the heck is underwriting these deals and approving them? Because it goes to the lender takes the application, pulls the credit score, goes ahead and looks at the deal, see if it's worth doing, and then they go ahead and send it for underwriting to approve. How are underwriters approving these deals because we can't blame the consumer too much, because the consumer, like a lot of people in school, don't understand some of this banking and what you need to know when you go in and what to look at a credit score, your beacon score, gaps on files. They don't know that stuff. So they depend on their local banker to help them and find them and suit them with a product that's going to long-term help them through their lives and potentially be a good asset. But nowadays, they're approving left, right, and center. And the problem with that is, who the heck is underwriting these deals? Because if you had an auditor go in there and look at some of these mortgage files, they'll be looking at them and saying, who the hell approved this guy? This guy's total debt service ratio is like 100%. And then it's been surfacing, falsifying incomes, falsifying even credit scores, underwriters asking the lender to ask specific questions on why this is happening, and lenders going ahead and lying on their own just to help the customer get a mortgage. Now, what do you have to say to people that are in this situation that they shouldn't have gotten in from day one?
Yeah, it's a tough one. That, I mean, the Royal Commission, we had a Royal Commission into banking.
That's
and finance
correct.
A couple of years ago, and that revealed a whole horrible caseload of stuff where people were actually being fraudulently given loans, where effectively records were being masked and changed. We got lots of different moving parts. We know that in some cases, the applicants are not necessarily 100% truthful as to what loans they've got and what their financial position is. So that's part of it. We also know that there are mortgage brokers in the middle who've actually been messing with some of the information and positioning in a particular way. We know that within the banks, the underwriting systems are not as robust as they should be. And so some people basically got loans they shouldn't have got. And then you've got other institutions around the edge who all hangers on, all clip the ticket on the way through, who just want the transaction at any cost, right? So there is a mass set of motivations to write more loans. And of course, the argument always was from the banks were, well, that's fine because property only ever goes up and incomes are only ever going to go up. So even if it's difficult today, right, down the track, it'll be fine, except now we've got higher unemployment, property prices are falling, incomes are falling. And the other point is that the assumption that most people who get a loan from the bank is, if the bank says I can afford the loan, I can afford the loan, right? So they basically rely on the bank. Now, my argument is you should never do that. You should do your own calculations. You should do your own cash flow, because often the bank will be able to offer you a bigger mortgage than is safe for you to take. Now, we have a thing called responsible lending here in Australia, and responsible lending basically said it has to be in the interest of the customer to get the loan, right? Well, actually, what it said, it shouldn't be in against the interest of the customer to get a loan. They've started to change it a bit. But what's happened now is the regulators said, no, don't worry about responsible lending for now because of COVID, right? Just keep lending. Right. If you interest-only loans, which were criticised in the Royal Commission, carry on. Switch to interest-only. That'll be fine, right? Because everybody's just making this up short-term, right? So we've got big questions about where does accountability lie for all this? How much of it is actually on the behalf of the individual who took up the loans? They should take some accountability, clearly.
Right.
But a lot of it is the system, the processes, and here's the killer. The Reserve Bank is providing liquidity to the banks, to support the banks, to ensure financial stability, right? So this is all about financial stability. It's not about what's best for the customer. Net of that is high debt, high house prices, low affordability, and supremely risky situations for many households across the country. And I keep coming back to, this isn't going to get solved in a few months. This is structural. This has been going on for 30 odd years. It's been building to this, right? And so the only way to get this fixed is to, one, recognize, wake up and understand what we've got. Almost nobody in official land wants to recognize. They all want to just extend and pretend, right?
Great, extend and pretend.
Two, think about alternative policies to begin to get housing affordability back to where it should be. And I think the third thing is we need more public housing. There is almost no public housing investment being made at the moment. So we've been leaving it to the market. The market has proved to actually benefit the big end of town, the banks, who've actually reported up until now very significant profits at the expense of individual households who are struggling with these mortgage repayments. And we're now, it's crunch time, right? And they can probably extend this a little longer, but it's not going to be able to continue. There has to be a point at which we wake up, change direction. And I just wish that the politicians, who really should be there for our own interests, not their own, not just to get re-elected, but to think about, how to make Australia even greater ahead. No. They're interested in getting re-elected. They will do the tactical things. Housing affordability is the number one issue that we need to solve, I think, in Australia. And unfortunately, there's nobody with the appetite to tackle it.
It's kind of interesting because southeast of you guys in New Zealand, they are entering into an election year this year. And Jacinta Ardern, her platform originally got her elected, and Phil Tyford, who was the housing minister there, was all about housing, the middle class. We need Kiwi builds. So they were going to build 100,000 homes, and there was going to be a big deal, and New Zealand was going to get back on track, and they only ended up building 13 homes. So what does Australia have in mind to actually do something to tackle this? Do you know? Do you know anything?
Zero. There is zero plans. And that's the point. There's no plans. It's basically extending and pretending.
I mean, they're not even making up a plan to get everyone excited?
No.
Really?
Not on this. I mean, they'll probably, in the budget, they'll probably a bit more. I mean, they've done a few things. I mentioned home builder earlier on. Housing it's gone really quiet, right? Mm-hmm. Nobody wants to talk about housing affordability. Nobody wants to talk about the high debt load. Everybody wants to blame COVID for what's gone on, and what they want to do is to take us back to where we were before COVID hit, as though that was nirvana, right?
Nirvana,
The point is that the seeds of the destruction of the housing sector were laid 20, 30 years ago through bad policy. It's just been repeated and repeated and repeated. And nobody wants to take the strategic decisions they should be taking because it's not in their interest to do it, right? Mm-hmm. Because who's going to get voted back in if in that house prices fall? Interestingly, last time around, the Prime Minister, in one of his last speeches before the last election, promised that house prices would not fall under his government, right? Mm-hmm. So it'd be interesting to see whether he says the same again when the election comes around.
You're talking about your friend Scotty Morrison.
Correct.
Okay.
Yep.
And here in Canada or the United States, we usually call it kicking the can down the road. So they're kicking the can down the road just to hopefully patch things up as they go and kicking it down further down, and hopefully, and that's what these politicians have been doing. It's clear as day, especially with the Mickey Mousing the banks have been doing. Especially the Royal Commission went in there and they barely scratched the surface. There was all kinds of horror stories coming out of there where people that have been deceased for 10 years are still being charged fines on their bank accounts and not contacting the next of kin to take this money. It's disastrous. So now, what do you see? Do you see a digital currency coming in? Like, I know we discussed negative rates, but for them to impose negative rates, they're going to have a digital currency so you don't see a runoff on the reserves and people removing their money from the bank accounts. Do you see the death of fiat, and do you see some sort of digital plan ledger thingy coming into light?
Well, interestingly, the Reserve Bank in the last week published their latest and greatest thoughts on the central bank digital currency, right? And they basically said, well, it's not something we intend to implement anytime soon. We are watching what's going on, et cetera, et cetera. But there was a little interesting clause there. They said, interestingly, some people have suggested that actually negative interest rates and digital currency could help in the context of monetary stability, right?
Help.
So they've sort of indicated that it could be something that might be worth considering, but they've not really taken it much further. The fact of the matter is we are in the situation where I think that there will be further inroads into a digital currency, because the main thing they're worried about at the moment is lack of control of Bitcoin and those other cyber currencies that are around there. They're trying to advocate a stable coin. They're trying to advocate a centrally backed digital currency of some sort, but it's very, very early days here. So I don't think it's a central strategy from the Reserve Bank yet. But your point about negative interest rates and cash is dead right. So there was a ban on cash transactions above 10,000 Aussie dollars that was actually being proposed a year ago. We actually tried to oppose it, and that's gone very quiet now. The reason we opposed it was because of what the IMF paper said, which basically was, bearing in mind in 2008, rates had to go down 4 or 5% to be able to actually provide sufficient stimulus to pull the economy out of the last financial crisis. Now, with interest rates very low, you have to go negative, and you have to go negative 3 or 4% to make it work. The only way that can work is if you stop people taking cash out of the system, because if you take cash out of the system, then negative interest rates won't work. Therefore, you've got to try and lock that system, right? And so the cash ban was seen as step one. A digital currency could absolutely be step two. And in some other countries around the world, and I've seen a number of people speculate that could be potentially on the agenda. But in Australia, at the moment, there's very little signs that that's on the immediate agenda. But longer term, to go back to what we said, with negative interest rates probably coming, and probably that's negative interest rates between the bank and the central banks rather than actually the retail rate.
Right.
Although in Europe, there are a few countries where now there are people being charged to hold deposits, right?
In Germany, anything over 100 large in the bank
Yep.
account in Germany, you're being charged. So people are keeping a balance of 99,000 euros.
Yeah.
And I think it's Germany. And there's another country that if you have more than 40 large, they're charging you. So people are keeping a balance less than that. So
yeah, exactly. So it is definitely at the worst end of the spectrum. But think about it. Negative interest rates turns the whole question of credit and debit on its head, right? It also makes savings. Well, why would you save, right? Because effectively, if they're going to take money off you for saving, then you're going to go more into debt, which takes us right back to the debt machine. The fundamental debt machine of Western economies, right, is more debt, more debt, more debt, right? Who wins? The financial system.
They do.
Right? Who loses? The people who have to pay back the debt. Remember, neoliberalism says, right, and we are in a neoliberalist world, the debt is your problem. You have to pay the debt back, right? And it's down to those people who are basically in the debt system, right? It's a system. It is designed specifically to support a larger financial system, more growth. It's bringing forward demand. But the consequences for individuals and households is dire. And I just don't think that people get it, right? What I'm worried about is that people just think that debt is just the way to do it, right? It's like, isn't that the way, with rates so low? Of course, I should get more debt. But you've got to think about the consequences, right? Debt has to be repaid. And frankly, what you pay on the debt is a part of the question, but you have to repay the capital too. And it's the capital which is going to be the killer for many people.
Mr. North, what would happen if a Ronald Reagan type situation walks into Australia, where to save the country, we're going to have to raise interest rates to 8, 9, up to 13% in some cases. And Ronald Reagan was backed by a lot of his constituents on that, and they needed a reset back in the early 80s. What will happen, Mr. North, with a Ronald Reagan type situation in Australia?
It'll never happen. I don't think we'll ever see rates go up. I think we're in a one-way street. Rates have come down. They will stay down for a long, long time. There's a big debate about inflation or deflation, right? And of course, in the Reagan era, inflation was the problem. I think it'll be very, very unlikely that we're going to see anything like that level of inflation. If interest rates were to rise, then people would just collapse. It wouldn't need 8%, just 2 or 3% above where they are. They would be out now, right? So we are in a situation of ultra low interest rates, probably for at least a decade, probably longer. Doesn't help savers. It doesn't help the broader economy necessarily, because inflation, I think, and you've got to look at Japan, got to look at Europe, right? They've been at QE longer. They've been at trying to make the economy work. Japan has bought more assets than almost any other central bank, right? Yep. And it's still not working. There's
zombification.
Environment. Yeah,
there's zombies.
And that's the point. Yeah, and I feel that is more likely the direction that we're going in as an economy. So I know that there are many people who point to money supply rising and say, see, inflation. No. Money supply intrinsically doesn't necessarily lead to inflation. It's what happens to that money afterwards, right? And so my concern is that the concept of very high interest rates and inflation, an inflationary environment, which many people who are aligned to gold and other metals are very keen to talk up, right, are missing a lot of other factors. And I think it's a much more complicated situation. I said to people, I don't know. I don't know whether the inflation is the future or deflation is the future. There are too many contradictory things. But I just don't think we're going to see high interest rates anytime soon.
Okay, because that would be actually the that's the nail in the coffin that would actually reset the economy if they ever raised rates, right? That's the one tool in the toolbox that bankers and banksters and don't want to touch. That's the one tool that do not touch tool that you cannot touch in the toolbox. Now. I want to kind of talk about a little bit about the vacancy rate, empty homes. Okay.
Yep.
Paris, France, got really sick and tired of seeing their empty city turning into an empty shell, where they imposed a vacant home tax. Then they didn't get the results they needed, so they went ahead and actually threw 60% vacant home tax in Paris because they were sick and tired of I think it was 40,000 homes were in the city of Paris were not connected to the hydro or the electrical grid, and that became a major issue. And they were sick and tired, so they raised vacancy tax to 60%. Does Australia have a vacancy tax now?
There was a little bit down in Victoria, so there was a quite a long campaign to try and actually do that. In many other cases, no. And we know that there are a lot of properties bought by, including international buyers, who bought new property and have never actually lived in it, never actually rented it out. It just sits there in splendid isolation as a long-term hedge, right? So we know that that's the case. And in fact, some people have done some very smart work to measure things like electricity and water, usage, and it basically proves that maybe up to half in some of those high rises I've never actually used. So that we've got a huge vacancy issue. 1.2 million properties across Australia vacant is the best estimate, right? Okay. Which is a huge proportion of the total. And bear in mind there's 10 million households, right, in Australia, so you can see.
But that drives up rents. That drives up rents, and then basically it inflates bubbles, and then the Australian proper that contributed to the infrastructure are left scrambling and just to pay shelter. You know.
Correct. No, you're absolutely right. So it is a fundamentally flawed element. But remember that the reason it's done is build more stuff, right? We have to keep building more stuff. We have to keep build more high rises. We have to, because that's been the economic driver. There's a million jobs in construction. So we need to build more stuff. Right now, my argument is, we should be building different stuff. We should be building infrastructure, investment for the long term, not just more cheaply built, poorly constructed high rise that's already falling down in places, as you'll see if you sort of think like Opal Tower and those
Mascot
sorts of things,
Tower,
right?
Opal Towers,
yeah, exactly. I mean, we've already got too many horrific stories of very poor quality construction, including use of asbestos and those sorts of things, which should have been banned but probably weren't banned. And all of those factors there are basically, again, distorted the market. And the other point to make is a lot of those high rises, which are vacant, right? There are as many property investors who also bought those high rises who now can't let them out, can't sell them, so they're stuck with these assets that are worth a lot less. How do you value something that is not basically lettable? I mean, that's part of the issue, right? So this is another lens on the stupidity of the strategy in Australia, which is build everything, build more stuff, it'll be fine. No, we need a different plan.
Mr. North, in LA County, Los Angeles, the empty home phenomena is so big that for every one homeless person living in LA County, there are 4 empty units. 4 for every one homeless person, and there's roughly 44,000 homeless people in LA County, Alameda County, Orange County areas. Now, how much of it is in Australia? Like, how much homelessness? Like, if you're going to give it a ratio to that, I don't see the homelessness that big in Australia yet, but I do see a couple of tent cities sprouting up here and there on the news. I do see, people protesting outside Parliament buildings. I see that, but are you having a major homeless issue there yet, or is it still kind of under control?
I don't think it's under control, but it's not well reported here. The media don't often report it, and I live in a regional area, right? There are a couple of people who sleep by the bus shelter around the corner, right? So even in regional areas, we are seeing some evidence of people being displaced. And there was an initiative as part of the response to the virus to try and actually house short-term some of those homeless people, right? Now, what happens now is the interesting question, right? So I think that this is an issue that is not actually adequately being talked about. Some of the lobby groups are quite vocal, but they don't get much time. And in terms of the statistics around it, it's quite hard to get hold of it, because when the census is done, right, the census is done on an address.
Okay.
Right?
Right.
So by definition, if you're not in a fixed address, you're not in the census. So I don't think we know what the true story about homelessness is in Australia.
Well, because we got reports from Dublin, Ireland, they're pushing to 14,000 people sleeping rough, and 4,000 of that is children, and that is a very scary, Terry, situation. It's just, the heavy dependence on foreign money as now starting to show its true colors, that now with restriction and less foreign investing, and now that China was a year and a half ago putting caps on capital flows leaving China, because China was seeing a massive runoff on wealth, and they had to put a stop to that. Now, what's happening here in Canada, Mr. North, is they're trying to ask people, like asking expats from China that are living in Canada, for example, saying, how much did you take out of China? Oh, I only took out $5,000. Okay, but we're going to tax you on the house you own there for $3 million, the bungalow you bought. We're going to tax you on your vehicles. So the Chinese government now is taking the assets, per se, and taxing them on that instead of taking their word on how much money left the country. So do you think money is going to be returned to China? Do you see people selling off assets to return money to China? Because that's something that's been discussed a few times.
Yeah, well, we are certainly seeing a number of buyers from China who committed off the plan, right, and paid the 10%, but never complete, right? Okay. So that's already happening. So in other words, they're prepared to walk away with the 10%, just forget about it, right? And it's hard to follow them back to China. We're seeing that. We also know that there is some sign in some areas of people now putting property on the market because of the demands back in China. But I think more importantly, the forward inquiries from China for Australian property have dropped significantly. And it's interesting, again, going back to this media thing, they were saying, oh, well, Hong Kong will save it, right? There'll be lots and lots of people from Hong Kong who will come and live in Australia because of what's happening in Hong Kong. I'm very unconvinced that that's true. I don't think we're going to see a large number at all. So I think that we have a significant issue in terms of that was a very important factor, not the only factor I said earlier on, but an important factor in terms of the driver of the property sector, but it's reversing now. And how strongly it reverses rather depends on what China does more broadly with the relationship between Australia and China, I think.
So they're on shaky ground. I know I've been watching the disputes back and forth, and let me ask you a semi-technical question. How much of Australia does China own? Because I know that the property, the water privatizations, you have all kinds of mines. You got, like I could tell you, for example, in Canada, our biggest coal mine is owned by China and with no Canadian hires. We sold two of our biggest gold mines. We sold the one gold mine that we have here in northeastern Canada, and we sold a gold mine that we owned in Colombia. And then Canada sold a lot of its major interests. And I've even heard, I know this is through the grapevine, that China might even buy our railway system. Like our entire rail system. Now, it's happened in parts of Africa. China tried to buy. I was speaking to one of the Chamber of Commerce member of the Chamber of Commerce from São Paulo, Brazil, and he told me that China was trying to buy the electric company there. So, how much has China infiltrated into Australia, in your opinion? Never mind housing, but
yeah, I mean, I don't think it's as high as many people claim. And in fact, if you look at the official statistics, in fact, the US and other European countries are way ahead. I think China's about 8th down the list, right, in terms of the assets owned. So yeah, I don't think it's anything like as big as people initially would think. First point. Second point is that there is now a real awareness of the political infiltration and influence of China into Australia. And in fact, some people have been writing about that quite strongly, suggesting that we should be just a little bit more cautious about some of the relationships that are being built. But thirdly, the economic relationship, which of course was remarkably strong. I mean, Australia has totally linked itself to China in terms of trade. That is where the tension now is. And in fact, in some areas, like, for example, in wine, where now China's asking for an inquiry, and other things too, we're seeing more and more examples where China's saying, well, we're not sure we want to buy that anymore. They're still buying iron ore, which, of course, is part of their strategy to sort of build their way out of
Well, that's a war
the current
machine.
crisis.
Major ingredient in building a war machine is iron ore, right?
Well, or houses or bridges, and they seem to be building more bridges and houses to nowhere. But yeah, in terms of actually trying to get a handle on how much is really tough. They've just changed the way that the register works here. So now smaller holdings from foreign countries are being recorded. So perhaps we'll get more data ahead. I think the truth is nobody really knows. There's a lot of gossip. There's lots of opinion. But the official statistics would definitely say it's not the number one issue.
Okay. All right. I was just kind of concerned about that because I remember during your wildfires back then, they were having problems with water because it's all privatized or it's like outsourced or like.
So there's definitely a couple of big areas where farms have been bought by foreign hands and they've got big water stocks. I agree, but in the scheme of things, I just don't think it's as a bigger issue as some would perhaps play it up.
Okay. All right. So I'm just trying to think if there's anything. Anybody have any questions for Mr. North here? I have a lot of people here. Wow, the comments are going pretty fast. Let's see if we have any questions. Come on, guys. I know there's about an 11 second lag between us and this transmission, Mr. North. So they're just hearing me say it right now.
That's fine. I understand. I do my own line streams too, so I'm quite used to the.
Let me do a quick channel
YouTube
plug.
Delay.
Let me do a quick channel plug if that's okay, Mr. North.
Sure.
Okay, guys. So, guys, here it is. Let's go to Mike in the night. Trends in the housing market here. Let's go to article scan. Guys, don't forget. I'm going to put a link in the comments here. Please do not forget to subscribe to Martin North here. Digital Finance Analytics. Here you go. This is the link to his channel. Guys, I'm going to leave you the link. I need you guys to please go ahead and subscribe to his channel. Go there right now and do it. And here is his blog, the Digital Finance and Analytics blog. And Martin North is a YouTuber like myself that could be easily contacted, which is really nice. You could just contact him if there's anything. You could subscribe to his email and all that stuff. So that's really nice too. I wanted to throw that plug out there for Mr. North, who is on the show. How you feeling? Are you still okay? Have we still got you here or what?
Yeah, I'm still here.
Yeah. You're not tired? You're okay?
Yeah. I don't know quite how much more you want to do, but I'm okay for a few more minutes. But maybe we should close it off in a little while, eh?
Okay, we've got Anna Key here. She's from Australia here. She's asking, ask Martin about the 10 times cost increase for imports.
Oh, imports of what? I wonder what she's referring to. I'm not sure I know which specific import she's talking about. So we know that there have been some significant price rises because, of course, the exchange rates moved, right? So we were down at 50. We're now up at 70. And there's a big debate about whether the dollar will go higher or lower. That, of course, is having a deflationary impact rather than an inflationary impact because of what's happening there. But I'm not quite sure what she's talking about the 10 times. Sorry.
Okay. Blunt News is asking, question, Mike, is it possible all the COVID money gives us another big economic inflation before the public catches on?
Well, to an extent, but like I said, the stimulus is being removed, right? So the question is how much more stimulus will be thrown. Let's see what happens in the budget in a couple of weeks' time, whether they will continue the stimulus. They probably should. But remember that the quantum is remarkable that they've thrown in already, and they're now talking about withdrawing it. So my own view is that whilst they will talk about all this policy stuff and stimulus, the net effect probably is less stimulatory than many would expect.
Okay, Mr. North, we got Nitin asking, any safe investments in the current market?
There's no such thing as a safe investment. It's all relative risks, right? Okay. So whether you go gold or whether you go silver or whether you go deposits or whether you go stocks or property, it's all about relative risks. There is no such thing as a safe haven.
Okay, we got where's it? Mitch Madden from Portland, Oregon, asking stamp duty status.
Yeah, stamp duty is still paid. They've sort of lifted the floor in a few areas to try and accommodate it. There's a big discussion as to whether stamp duty should be replaced by a land tax, which basically, of course, then change it from a transaction-related thing to a longer-term set of taxes. There is some building consensus that makes sense because it would reduce the friction of buying and selling houses. But guess who's advocating it? The real estate sector. I'm more skeptical. The other point is the real estate stamp duty supports the state's funding, and none of the states have explained to me how they'd fill that funding with the same amount of money without massive hikes of taxes elsewhere. So it's probably one of those aspirational changes rather than anything else.
We have hold on. Then we got Lord Humongous from Denver, Colorado is asking. Ask him how the lockdowns are affecting him.
Well, I'm in regional New South Wales, so I've been quite fortunate. I haven't been up to Sydney for months. Locally, we've had some closures, some reopen. I tend to go out during the day when it's quiet, like when I go to the shop early and those sorts of things. But it really has changed the way that I do things. I do a lot more things virtually. I do a lot more things, like this, for example. And we're getting more home delivery stuff. My wife is quite unwell, so basically it's quite important that we actually try and insulate ourselves as far as we can from the from the thing. So that's the way it's worked. But I tell you, it's much better being in regional New South Wales. I wouldn't go to Sydney at the moment.
Okay, Anna Key saying all shipping containers in Sydney wharfs have gone up 10 times this year. That's what she meant.
Oh, okay. Didn't know that. Sorry. I can't comment. I'll do some investigation and perhaps even make a comment on my own show.
Steve the Plumber's asking from Toronto, Ontario. I would like Mr. North to comment on how he sees the Canadian real estate market as a whole with respect to house prices declining or rising. Lately, in the major cities here in Canada, our house prices went up 7% during all this fiasco. So...
Well, I remember I've had a few conversations with people over in Canada, and there are many similarities between what's happened there and here. Your recent price rise is not totally surprising, I think, but is it sustainable? I question whether it is.
No, because again, the middle class, there's no more middle class getting into the market. The province of British Columbia is having a really tough time finding any first-time home buyers at all. They're so dependent on foreign investing. And the last tower that we had, a major tower that we built, if you wanted to buy it, you would have to go to Shanghai to see the viewing, because they had the release for it and the model on the table and the rooms set out and different pictures, and you had to go to Shanghai to buy it. You couldn't buy it in Vancouver, even though it was in Vancouver. Okay, we got Charles Owen asking, should the central banks be allowed to buy mortgage-backed securities?
Should the central banks be supporting the banking system? My own view is central banks have lost the plot completely. And the sooner we get rid of central banks, the better. They are, in my mind, not actually supporting the right strategies. They are actually perpetuating the debt cycle and the debt machine to the extent that they continue to buy back mortgage securities or other types of bonds. They're perpetuating a system which has proven itself not to be successful. I think it's time for a fundamental rethink about how our financial system operates, who controls it, and who makes those calls. Central banks around the world, the cabal of central banks, are all caught in this same way of thinking about, and I just define madness and insanity, is to do the same thing again and again and again and expect a different result. That's precisely what they've done. They won't get a different result. They will continue to inflate the amount of money in circulation. They will continue to just do more QE, but it won't solve the fundamental structural issues we have.
We have, hold on, Anna Key's asking, when can I look forward to buying property? Depends.
At some point, I do believe that prices in Australia will come back. It'll be a slow grind. It will be a 3 to 4 year thing. So, I've said to a few people, just take it easy, just relax. Don't think I'm going to miss out if I don't buy now. Right? I think that later prices will be more affordable. That said, if you're an owner-occupier purchaser and you see exactly the right property in exactly the right place, and it makes economic sense,
Total
the
debt
property
service
market,
ratio fits. You're not
yeah,
gonna, you're not gonna.
yeah.
Ray Meritus is asking, housing will just increase or fall less by the stamp duty quantum if that gets taken away.
Correct. That's exactly right. It's a bit like the stimulus thing, right?
Right.
If you take the stamp duty away, prices will go up by the amount. Exactly. It's a zero-sum game. I agree.
Mike Martins asked Mr. Martin North, in terms of money, I have family that is on a disability pension. Do government have the right to stop her payments if she doesn't take the vaccines? That's an off-topic one. That's a Mike in the night question.
I mean, it is a civil rights question, and I mean, there was a interesting misspeak that our Prime Minister did, that he rather suggested it might be imposed. I think he's walked that back now, so I suspect probably not.
Well, but it's already been addressed, and they're going to readdress it in a different form of language, and they're going to rediscuss it and bring it across the floor one more time. And then 2 years later, what? We told you this 2 years ago. You know what I'm saying?
That's how politics works.
Yes, Mr. North. Okay. I really appreciate you taking the time to come on Trends in the Housing Market. This is our 215th episode. Mr. North, I really appreciate your time, and I really appreciate talking to you. I really appreciate you giving us your analytics, your analytical backing on what's going on, and it means a lot to us here on this channel.
Well, I've enjoyed speaking with you today, and hi to you. Congratulations on that amazing number. That's good, and nice to meet everybody on your channel too. And come across and see us on Walk the World. We do somewhat similar stuff, and it's such an interesting time to be across all of this. Lots of decisions ahead, and it's really important that we advocate for the right outcomes for ordinary people, not just for the central bankers.
Okay, Mr. North. Hopefully we'll get him on Mike in the Night, and we could go into the whole banking conspiracy and get him on the show, and maybe get some guys from Colorado and a couple of guys in from Florida to ask, formulate some good questions. You know what I'm saying? All right, Mr. North, thank you so much, and God bless.
Take care. Good to
night.
speak with you. Night.
All right, guys, that is Mr. North from Digital Analytics, and he is signing off right now. Guys, thank you for coming on the show. Thank him very much for coming on the show. Let's plug him one more time. We've been having excellent internet tonight. Our internet's been so good. Lord Humongous says he's just subscribed. We got Ben Savage in the house. We got Aniki in the house. Thank you, Mike and Mr. North. Lord Humongous saying, thank you, Mr. North. Cheers, Mr. North. We got everybody in the house. Thanks. I appreciate. Okay, let's go. We got a little bit of time left on Trends in the Housing Market. Lenny Pooh is saying, great guest. Yeah, we bring the best on trends in the housing market. I want to see if I could get, hopefully, I've been in touch with Formafist. I want to get him back on the show. Daniel from Northern Beast, or Northeastern, he's northeast of me. And I want to see if I could get what's his name? Back on the show. Robert Downey Jr. No. I meant if I could get back on the show, what's his name? Uneducated economist. I messaged him a few times, but he's busy. He's got a lot of things on the go. So hopefully he can make some time to come and see us again here on Trends in the Housing Market. DFA Cookie Monster saying Martin North is a legend. He's a total legend. He's a predictor. He's been ringing the alarm for years. He's been telling people basically what is what, and wake up and look under your pillows. Look at what you're signing. Look at what you're signing your life to. It's so hard to walk away from debt. You know what I'm saying? No, Steve, are you okay to call into the show? We gotta get Steve, are you awake or I'd like to get Steven on the show. It's been a while, you know. Steven, even Stevens. Let's see what he says here in the comments. Yeah, we got Layla in the house. Blunt News in the house. We got all kinds in the house. We got You see, guys, you guys see how important, and this is what we've been talking about. What 200 and what? We have 215 episodes of this show. We've been talking about this. We've been talking about how important it is first-time home buyers. How important it is to get fresh blood into the markets. If you can't get fresh blood into the markets in first-time home buyers, you don't have much of an economy. But the problem is, now they add first-time home buyer loans, interest-only mortgages, 100% loan to value. Come right down and sign on this piece of paper. Steve says he cannot call in, not this evening. Jenny Jean is saying, great show, Mike Martins and Martin North, thank you so much. Ray Marty is saying, congrats on getting a good guest on. Oh, Steve is saying he's had a rough day. Transmission in his truck blew up. Yeah, I could fix that for you if you want me to. We got Aniki saying the Ponzi scheme collapses without fresh home buyers. That's correct. If you can't get the freshness into the markets, you're in a lot of trouble, guys. You don't have an economy. All right, let's see who we can get on the show. Let me see who's out there. Let me see who is out there. Who's awake? Who is awake out there? Who wants to add? Ooh, I got a lot of people trying to add me on Skype. Lots of people trying to add me on Skype here. I'm going to add them all. And I'm going to get, you know what? I'm going to get, you know who's always a good guest? Anna Key. Anna, I'm going to be calling you in a few seconds, so turn on your Skype, okay? You're in Australia. We might as well finish off with an Australian thing. We got a few minutes left in the show. Maybe we could maybe unpack we could unpack of what Mr. North said earlier in the show. And Paul S. is asking, how is the immigration scene in Canada with COVID? I know we still have open. I know we can't go to the States, but we could go visit China if we want, but we can't visit the United States right now. Okay, Mike Banks has a good comment right here. Why would it collapse? The housing sale in BC is based off of crimes and elites buying homes, not regular people or first-time homebuyer locals. This has been the way for now 15 years. It's been a long time here in Canada where a lot of people have been waiting the sidelines for many years. We're not talking 2-3 years. We're talking like a decade, right? All right, so let's see, Aniki. Let's see if she picks up. I want to get Anna on the show. Pick up, Anna.
Hello, Mike. How are you doing?
Anna, how are you, my friend?
Oh, I'm good.
It's so good to hear from you. I know we spoke last week, but we just had Mr. North on. We unpacked.
Yeah, I know. That's such a coup. That was fantastic.
All right, so unpack some of the stuff you heard that maybe you want to talk about, because I mean you've been you've been listening and understanding and following this trend.
Well, I fundamentally have been watching Martin North for years and years and years, and looking at how he's dissecting the housing market and getting, as he calls, granular. And it's really all we've got in Australia to counteract the sort of snake oil salesman.
Mm-hmm. Because the major technical underpinning in Australia is real estate, and Canada, and the UK, and New Zealand, and all them places.
Well, he follows well, as we've all been following, it's all inside the banking and the government sectors.
Mm. We got Peter O'Brien saying, my daughter's 37. I think she'll be well into her 40s before she could afford to buy.
Absolutely. Yeah, from what Martin says and the way things are looking, it's going to be years because this fallout is going to be quite incredible. And the reason I kept bringing up about the 10 times shipping that Martin didn't know about is that I've got a bit of an insider in importing and shipping who was having a bit of a rave to me last night about the cost to import. And these are containers coming in from China and all over the world. And she's bringing in medical equipment along with other things. She's got food and other things that she looks after. But the costs have gone up 10 times. And what they've got problems with the Sydney wharves, and they're shipping down and unloading in Adelaide and Melbourne and then trucking everything back into Sydney. And the costs are extraordinary. And she said that small businesses are going to implode with the costs of importing goods. So that's my sort of latest.
I want to reference a video I made a year and a half ago where it was don't buy anything, because I got a really heartfelt email from somebody that wants to remain anonymous, and it was called it was from 15 months ago. It says, Australia housing, do not buy anything. And I got an email from someone today that was very heartfelt, from a person that was looking to get into the Sydney market and wanted to be part of the property ladder thingy. And then now they've been watching me for a good while, and they sent me this email saying I've saved their life. Because they'd be in a financial...
Yeah, because usually the young ones, when they get started, they've got a limited risk, so they've got to go into the high-rise apartments. That's usually their first step on the ladder, is a small apartment slash, I don't know, you call them condos, I think, or box in the sky, fundamentally, and so they sort of get into the small boxes in the sky. But lately, these small boxes in the sky have become super expensive, and you're absolutely right about the mafia of the strata. And on top of that, they just get slaughtered inside these small boxes in the sky. And so once that makes it so they can't get to the next rung.
That's the problem. Getting on the property ladder, you start something modest, then you start slowly working your way up the ladder and slowly taking it to the next level. And then after what? And then after, you get into maybe a semi-detached, and then from there you have your first child, and then you get into maybe a detached with a little bit of a backyard. Those days, that's living the dream right there, and those days are gone. But people are productive. They want this kind of life. They want to be productive in society. They want to contribute to the infrastructure,
Absolutely, and and courtesy of everything that's going on, they've decimated their first step.
And that's the problem. They can't even. So now, I don't know if you remember this, Anna, but in Toronto, we were reading an article from Better Dwelling in Toronto and Vancouver. They were comparing how long the average wage earner needed to work to put a down payment on a condo. And in Vancouver, it was 19 years they had to save to put a down payment. And in Toronto was 20 years the average wage earner. So Buddy gets out of college. Your dad says, okay, son, you're going to go work 20 years so you could put a down payment on a condo. So by the time you're 45, you'll be in the property market.
Yeah, that's how it is. That is, unless they get a leg up, that's how it is. It could be 30 years of savings before they can get there. And they've, on top of that, we've now had 15 years of unstable work. So people have got no stability unless you're in the government sector or you're a teacher and you can't be sacked or fired. You can make lots of mistakes and get away with it. So there's only a couple of areas where you've got that level of stability. So we've got to sort of start getting the numbers and kind of dissecting how many people are in government and have government employment, how many people are, and that includes, all the hospitals, it includes all the education. So whatever the government's
Firefighters,
controlling,
ambulance attendants, all those people.
yeah, all of those people have job stability, and everybody on the other side has instability. So if we can see where that balance tips over to the point where the instability moves into the government sector, then that's going to get really interesting.
Anna, can I ask you more of a sentimental question about Australia?
Yeah.
Do you think people are losing faith in the idea of Australia? Are people losing faith in the Union? What makes Australia, all the states? Are people losing, the idea, there's the idea of Canada and what makes Canada Canada. Are people losing faith in the idea of Australia?
I don't think so. No, we're sort of not allowed to, because we can't go anywhere. We're stuck here. We might as well have faith.
Right. Okay.
There are sectors, and the whole diversity and multicultural issue is tricky, because some reject Australia, and so we've got a whole block of different sort of types of people that kind of reject Australia and say that we're no good, and they want their laws and they want their way of living inside Australia. So but the Australians themselves, they're very rusted on, so to speak.
Right. Okay. I wanted to ask that because we're losing, I think, as heartbreaking as it is, we're losing the idea of Canada, and it's not, the idea of Canada isn't working out, and there's a lot of discussion of provinces wanting to secede from the Union or from the idea of Canada, or how you would say it in Canadian ways. In the United States, a secession from the Union. In Canada would probably be a secession from the throne, or secession from the
After we're through this COVID, and everything that's going on, who knows what's going to pop up, So those sort of people are going to be upset, and they're going to kind of group in, cling to the family, cling to your group, cling to your state. We've got WA always piping up with that every now and again, and carrying on about it and saying that they pay too much towards the entire country with their mining. And so I've sort of kind of had a lot of that sort of talk, and we've also had, we're going to be a republic and get rid of the Queen, and that sort of stuff is always around.
Right.
Succeed. But when a lot of people are full of talk, and talk's good, and it makes good headlines, and the news talks about it for a bit, and then it's gone. It'll be gone. It'll be another one of those.
Anna, to make extreme changes, there needs to be extreme measures put in place. Like when Mr. North was on the show, I said, are we going to see a Ronald Reagan incident where somebody comes into power and then has to raise interest rates, right, and actually bring the country back on its feet, and Ronald Reagan did save, because this Mickey Mousing that we're in right now, if Ronald Reagan didn't raise interest rates in his first administration, this Mickey Mousing that we're doing would have started a lot earlier in the United States. So he kind of saved.
I think the Ronald Reagan thing, you've got to remember what he's come off, he's come into
right
at his point. So that was after, a great deal of growth from the 50s to the 60s to the 70s, and the 80s came along, and everything was riding pretty high. So yes, he raised the interest rates and sort of cooled it off. But at the moment, I can't see, I'm on the same page as Martin North there. I can't see how they can raise I want them to,
yes,
but I can't see how they can do it without enormous insurrection and problems.
Well, if they did that, then the people waiting on the sidelines could get into the markets again.
Uh, I don't, yeah,
And
I've
then
been
your money
sitting
will
on
pay
those
you money. I don't remember
sidelines.
if you remember ING Direct. Save your money. Put your money in our
Oh,
ING Orange
I'm in
account and gain
ING.
5% interest. So if you have
Oh,
$1 million,
oh,
you're getting
yeah,
$50,000 a year. Now you put
yeah,
your money in the bank. You put $1 million. You're getting,
yeah,
I don't know,
yeah. I've been
1,200
saving.
bucks a year.
Well, oh no, you know what happened? I was saving money in the ING and blah 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 and going all into it, and then all of a sudden they said, no, you've got to put $1,000 a week, a month into the account for it to get the certain amount of percentage, and then they said, now you've got to get our Visa card, and then you've got to make 5 Visa debits to get a certain amount of percentage.
Mhm.
So I've had to jump all of these hoops to try and maintain a percentage on the money that I'm saving. And on top of that, every sort of, I don't know, 6 months, it's been, we're bringing it down, we're bringing it down, we're bringing it down. You just jump more hoops and we'll bring them, so savings is starting to kind of look very strange to me.
Frail in the wind.
Well, weird,
Yeah.
like the hoop jumps, and you've got to do this and you've got to do that, and you've got to sort of sign up for their debit card, and more debt, sort of, like you've got to make transact. I had to actually spend money to get the interest rate.
Mm. Yeah, there's always
Like
a
they forced
catch.
me into spending. Yeah, weird. Yeah, weird. So that's when I sort of became the queen of buying $1 items on eBay.
Hmm. Hmm. So it was kind of good that we brought up the Royal Commission and what they uncovered and stuff. I remember reading a few articles about the Royal Commission, and I was just absolutely disgusted with if a lot of people watching this show right now actually looked and actually took a good look at what these banks were getting away with.
What they unearthed, I know. And look at what's happening. My girlfriend has got a house and she's got a mortgage, and she was impacted by the Royal Commission, where they pulled their heads in and they said, we've got to look at everybody. And then she was told she can't pay interest only anymore. She
Ooh.
has to pay a principal and interest. And she went sort of through that. And then, of course, she was working at Flight Centre, so that was the fun job to lose. And then the banks are now being on her back and sort of going, we're going to defer your mortgage. And now she's been offered interest only, right back where she started.
Interesting.
The
Yeah,
whole
because when
thing
they
is,
rewrite these mortgages or they refinance the mortgages after 5 years of the term, because then you have an amortization, right? So the term comes to end and they have to go refinance for a better rate or whatever,
yeah,
lock in at whatever rate
yeah,
it's at.
yeah.
And you do all the document fees, the processing fees, the appraisal, all the Mickey Mousing, you're back to square one.
Oh, absolutely. I mean, the banks are basically up to their old tricks again. I mean, the reason that I've become incredibly sort of attuned to what's going on is courtesy of the GFC when they did the derivatives and the mortgage-backed securities. And I was appalled, about 5 years ago, I discovered mortgage-backed securities were back on the game.
Hmm.
Hybrids are back in the game. They've just renamed it. They're doing exactly the same and
They
just
just
given it
rename
another
the
name.
language gets twisted.
Yeah, 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 yeah. So that's why why I think this container 10 times the shipping costs for everything. I spoke to another person that's bringing in a lot of things through FedEx from Germany inside the military, inside defence, and their costs have gone. They had a $300,000 import. Bringing things in bill that was off the charts. And so it would have been, 30,000. Now it's 300,000. And my girlfriend that works in the shipping business, she's telling me it's 10 times. And I'm sort of thinking, all of these high costs have to be passed on.
Hmm.
So in her case, it's medical, so it's all going to be passed on into medical. So we're going to be bled in when we're not well. So all of those costs are going to go up. They're going to have to go up. And inside that, all of these shops that are selling things for Christmas, well, they can't sell at the prices that we're used to now. They're going to have to put them up, and people are going to have to pay more for all of this. And of course, we're tightening our belts. We're seeing what's on the horizon. So these more small shops and small businesses are going to go under. And what bothers me is that I don't know how many small businesses are attached have got their homes attached to them as collateral.
Oh yeah, you start getting into those fundamentals and looking at what's
Yeah,
executed on what
yeah.
property.
Yes, it's that's something that nobody's kind of looking at, is how many people have put their homes up as collateral inside business. That's one little thing I'd like to talk to Martin about.
Mm-hmm.
He has touched on business and small business,
Mm-hmm.
Martin's channel,
Yes.
and it's really great that he's bringing it in. And yes, but every time I'm looking at loans, even government loans that are coming through for disaster. Let's say you're part of the bushfire and your house burnt down, and you're allowed to apply for $130,000 grant,
Mm-hmm.
and it's payback at 0.8%. Well, that's all terrific. Your business is still good. You've still got customers, but you've just got to put some infrastructure in, so that 130,000 at 0.8% would be terrific. But they want you to actually collateralize your home.
Guys, I left the link again for Martin North's channel. He went up in subscribers. I just noticed he was at 44,000.2. He's at 44,000.3 right now. Thank you everybody for subscribing. The link in the thing. Let's get this loud and clear. Let's start. How do I explain it? We need to all somewhat kind of be with each other at this time, start more contacts with other people in the same that have been broadcasting the message, right? And we're telling people to take a good look at what they're financing, what they're going to be paying for, how long they're going to be paying for it. Unfortunately, now, Anna, tell me how disgusted you feel that people with such high level of education, they're not even being taught in school basic fundamentals in financing.
I know, it's terrible. It is really, really terrible. And I just think that they're the sheep to the slaughter. They're the ones that are, they're the ones that have nightmares at night. They're the ones that break up in their families. They just don't know what they're getting into, and they're not taught anything, nothing. And when they do economics at high school, it's such mumbo jumbo. And seriously, when all of these economists, you've got to take them with a grain of salt, because remember, GFC, what economist was basically saying anything prior to that? None.
No, there was only very few economists that were raising the alarm, right?
No, they weren't even economists that were raising the alarms. That guy, Michael Brewery. I don't think he was an economist.
You're talking about like more mainstream economists that the media goes to.
The heads, the economists from such and such university and this university.
Oh, those guys are all post-dictors. Those guys to me are post-dictors.
Yeah.
They see the news and they discuss what's happening at that time. None of them predict. Martin North predicts. I predict. There's a lot of people out there. Daniel from Formafist predicts. There's a lot of people out there predicting because they're going off the fundamentals and looking at how they've been keeping this bubble alive through so many different Mickey Mouse measures and throwing every tool in the toolbox they got. And now there's nothing left, Anna. The only thing that's left in the toolbox is to go to negative interest rates or raise interest rates and say, what the heck? Let's reset it.
I'm just feeling negative. I think they're going to go to negative interest now, only because they've tried their interest rates, and they just know what interest rates will do. Like they just know how many people they've got the hook. They sort of know how many people are just hand to mouth and how many people have got limited savings, and they're not going to be getting wage increases. So there's how much they sort of know how much they can squeeze. But with negative interest rates, what you're doing is basically taking away from people that have already
savers are being punished and borrowers are being rewarded.
Yeah,
we got Papa
I think
Piss.
The savers, are the low hanging fruit.
Yeah. Papa Pissed in the comments sent me $2.79 on Super Chat. He said in the comment there, feds to give cities $1 billion to buy motels and hotels?
Oh, yeah, okay. Yep. Yep, they're going to keep the hotel industry afloat.
So they're gonna what? They're gonna federalize our hotels and motels now?
So this is the thing. I was looking in at Sydney hotels to see if I could go and stay in hotels, thinking, oh wow, I'll be able to get the Hong Kong kind of rates,
Mm-hmm.
and no, they still want they still want you to pay the right amount. I mean, all they've got to do is just drop it down, roll it over, and they'd get back on the board and make it so that everybody can afford to go to a hotel, and hotels would be fine.
Mm-hmm. Mm-hmm.
Turnover, filling, bookings. No, they want the $300 a night. So yeah,
Let me ask something, Anna. Let's go a little bit deeper. Let's go one more layer. Could it be that maybe, just maybe, that they're asking them to buy these hotels so they can start housing people in the future?
yep. And the high rise, they've floated the high rise offices are going to become apartments.
Because I know they did that in New Zealand when they started housing
Yeah.
people in hotels because the so many homeless families.
Either that or they're looking for the sort of quarantine locations.
So, and Nathan S is saying, "Yo, Mike, did you see that Australian bank Westpac, who got done for another $1.3 billion in money laundering?" Yeah, I remember. Like, I could go.
Big
Let's take a tour through the old Mike Martin's the Mike Martin's channel here. Let's type in Westpac under search under my channel. So let's type in Westpac, and you'll see all the sinking ships.
Yeah.
All right,
Yes.
Westpac. Right here, Westpac. Could it have a bank run? Did I spell that wrong? Okay, wait.
I think they had what 300,000 transactions of money laundering.
Oh no, it was
Some
16 million. 16 million.
16 million,
Yeah.
16 million transactions of money laundering, and it was associated with a pedophile ring of some description. There was pedophilia and money laundering sort of tied into Westpac. And yes, this is the new money laundering that they've just discovered. It was something like $20 trillion worth of money laundering. In Australia, I think we've only got 430 million, some very small amount, but obviously Westpac is part of that little gang as well, that little unearthed.
Okay, we got the videos here. So this is what I got for Australia banking disaster. I did this video 2 years ago. What a disgusting situation this is. If people did things by the book, we wouldn't be in this problem. And then the next video I have is Australia to ban cash, so you pay the bank. So that was from a year ago. Royal Commission versus Australian banks. Banks inquiry doesn't want more apologies. CBA under fire. Handling of filings with insurance products brokers incentives. Then we got Australian banking disaster ahead from a year ago. Australian bank may sack 10,000 staff, shut 300 branches. This is all before COVID, eh?
Yeah, and the fun part about this, not one person's gone to jail yet. GFC.
Oh,
Not,
what are you
one
talking
person's
about?
gone to jail. There's no we've got to start locking this white collar crime up, including the people inside the government. They've got. It's time to put the foot has got to come down. These banks, these fraudsters, these banksters, they've all got to get done. Whether that will ever happen, that's just maybe wishful thinking.
No, and we have to kind of actually rephrase that. Let's rephrase that. Would they allow it to happen?
Yeah, it's got to happen. We've got it. These people, they just keep. It's like the banks when they were in trouble and they were heading into the Royal Commission, they got asked some tricky questions, and all of a sudden that person's left that position with his lovely golden parachute, and another person comes into play, and it's like this revolving door of people being shuffled around in government and in the banks, and
no one's taking accountability.
Exactly, and they're sort of bailing the minute they see that there's trouble, so that they can't get basically hold up before the judge and thrown into the clink.
Accountability. That's the problem. Everybody is.
Yeah.
But whatever happened, Anna, to taking why are people so scared of taking accountability or admitting being wrong and paying the fine or penalty or jail time? What's wrong with being accountable for making a mistake nowadays? It's almost like, you know what I mean?
Yeah, yeah. Nobody will be accountable. Nobody at all. There's no accountability anywhere. We did catch a couple in New South Wales government, and they were doing sweet deals behind the scenes, and ended up in the clink for a bit. So that was very nice to see. But it was sort of too late. The money had been extorted from the populace.
Damien is saying, why are you using Martin North's description in your channel? Martin North was on the show for the first hour. So if you want to scroll back, Damien, and go back to the beginning of the show, you'll see my questions were okay, right?
Yeah, they were brilliant. No, I think you did great. It was really nice to see you and Martin together. Mm-hmm. Mm-hmm. Yeah, so I've watched you both independently, and now we've got you together. Yay!
That's good. That's good. I'm happy. But I'm more of like a street level type of looking at the situation, and that's how we talk here on the show. We're more of that, hey, what's going on? Let's look at these articles. Let's analyze this ourselves. And then...
Yeah, we're on the ground. We're more on the ground, and it's who you know, not what you know.
Yeah, and then Mr. North is using analytics, taking his time, studying, looking at fundamentals, trying to wrap his mind around this whole craziness in a different perspective, and he has, again, analytics to back his findings, and a lot of news periodicals are using and quoting him and using his discussion pieces all over Australia and the Commonwealth, you know. So
yes,
it's
well,
good.
he is our only independent source,
right
at the moment, from what I can figure.
Right. America's got tons of independent sources. Canada's got quite a few actually too. There's a lot of independent sources like myself that are small, but still make a little bit of noise. We still make some noise in the tunnel, you know. We still make a little bit of echoing once in a while, you know. We got the great subscribers here asking the best amazing questions, and you know, everybody that's like, we're a community here. And I don't know if you know, but when you look in the comments here, it's like you recognize all the names here in the comments from being, you know, watching the show for so long, you know.
Yes.
It's like everyone knows each other here. Lord Humongous, Mike Banks, Layla, TJH, Ben North. Like, I mean, we all know each other.
I know, and it's a great resource. It's a great sort of balancing, and it does cross the board. You know, inside your housing and your Mike in the Night, and your general what's on offer inside legacy media. Mm-hmm. Mm-hmm. And what we're being told, and it's a balance. It's a balancer because it's against what we're being told, or how we're being manipulated in the media, and then what we're seeing on the ground. And I really enjoyed your rerun of Raven's first
appearance.
Calling. Yeah, and I remembered he talked about his benchmarks, and they weren't like Martin North's with his analytics, but he had his analytics on his shipping yards through the trains and the containers being shipped backwards and forwards across the country. Mm-hmm. Mm-hmm. And then I thought, well, my benchmark is a restaurant that resides not very far from me, and it's all open, so you can actually see how many people are in. It's window faced, a really, really long, about 20 metres of window, and everybody sitting in round tables dotted around. And through this whole entire thing, bar the 2 or 3 weeks that we were in lockdown, they have been full of guests. Now, these guests, it's the per head on each table is $250, and it goes up to $1,000 easily.
Really?
Yep. Full as a goog. Huh. So that's my benchmark of how much should I worry.
So here it is. Australia's Westpac agrees to $920 million fine over exploitation. Westpac Bank to pay record Australian fine over laundering breaches. They had 16 million breaches. You know, I can't even find that article I did about a year and a half ago when the Royal Commission was doing this and Westpac was fined for 16 million different money laundering acts. It's kind of funny, like how like YouTube secretly removes videos off my. I know one person in the comments that could vouch for that video, and that's Lord Humongous, because he knows I made that video because he commented on that video.
I know that one. I'm very aware of it because being Australian, I hone in on anything you talk about around Australia and find it very interesting. And it's general. That's general news about Westpac and. But
it's
this
been
is
happening for the last 10 years anyway.
So in the last 2 years, they've been hit pretty hard. 1, 2, 3, bang. But you got to remember, these banks cry poor when they lose. They're making billions, and they lose a couple of million, and they cry poor.
Yeah.
So it's like, oh, boo hoo. They didn't do so good, and the shareholders get. I don't think the shareholders.
Well, they got to keep the shareholders happy, right?
Dividends. Well, I'm not sure if they are at the moment. Their dividends could be cut severely. Mm-hmm. And this is another end of things, is where there's a whole lot of aged, self-funded retirees that are currently going backwards.
Yeah. And that's a big problem. Maybe we'll have him back on the show again where we could talk about pensions and where pensioners are going to be heading. Anyways, Anna, I'm rolling into my second hour. And
okay.
I want to end the show because I'm getting tired.
Yes, I'm sure you are. Well, you have a good evening, and thanks for calling.
Well, thank you for coming in and giving us your points of views. I really appreciate that.
Oh, you're very welcome.
All right, God bless you.
Talk to you soon.
Thank you. Bye. That is Anna Key out of Australia. All right, guys, I hope you guys enjoyed the discussion with Mr. North today, Martin North from Australia, from Digital Analytics. Don't forget to subscribe to his channel, please, and be part of the discussion there, because again, a lot of these patterns are interconnected, and it's happening right across the Commonwealth, right? If it's happening in Ireland, you'll see it happening in Canada. And if it's happening in Canada, it'll be happening in Scotland. And if it's happening in Scotland, it's happening in Australia. They're all intertwining and sharing ideas for the worse. And we will discussing that. Guys, don't forget to set your reminders for Mike in the Night this Saturday, guys. This Saturday, Mike in the Night. It's going to be good. Mike in the Night discussion from all over the Commonwealth. We'll be taking in calls. And, we'll be doing that. Okay, we'll talk soon. I'm seeing a lot of good comments coming in, but we will be most definitely taking in more stuff on Mike in the Night. Don't forget to add me on Skype to be part of the show, and Mike in the Night's going to be real good. Maybe we'll be touching on about we'll follow up with our friend over in Victoria. He's going into week 27 in lockdown in Melbourne, and find out if he's still okay, because I heard he was on ramen noodles now, and he ran out of ketchup, so we got to find out if he's okay. And, Damien is saying, Mike, I will tell you a nice saying. Give a man, I'm not going to say that. I can't say that online, but give a man a firearm, he will rob a bank. Give a man a bank, he will rob the world. And that is from Damien S. in the comments. All right, guys. Thanks so much. Guys, take care. And if you can't take care, please